Okay, very well. I believe we are live.
I believe we are live.
Wonderful.
I believe we are live.
Wonderful.
I believe we are live. Wonderful.
Perfect. Okay, setup as usual. We are here for a Q&A session and I think everything will work correctly. Okay, let me just wait a couple of minutes so everybody has the time to join. All right, fair enough. Okay, this is the official second or third live of this channel. Hi, Kiss HDF. Seems like this is working correctly. Please tell me if the sound is working, if the video is working. We are back to doing a Q&A session today. So we'll have some time. Seize this opportunity to shoot your question and let's have some fun together. Talk about specific stocks, talk about the market, because since the last live, I believe the last live was when was in May, right? Something like this. A lot of things have happened actually. A lot of things changed in this market. So it might get pretty interesting. So in case you have a question, you have the chat that should be working properly. So if you have a question, feel free to shoot your question in the live. Um, if you can, please leave a like to this chat with this live. It helps with the YouTube algorithm, obviously. Yeah, it's working. Perfect. Perfect. I have a few stocks I want to mention on this live. Stocks that I am studying right now and that can be pretty interesting. We got the first question already. I like it. Opinion on FICO Equifax. Well, for FICO and Equifax, that's a very interesting question. Two very interesting stocks. I believe I released a video on YouTube about FICO, so you got my opinion already on this one. So Equifax is in a similar vibe. You have a quality compounder, but the price is not right for the kind of investing I do. Let me just go to Google Focus and see if I can share my screen so you can see better, and we'll start from there. Okay. Mm, okay, fair enough. Normally the Wi-Fi should work properly right now. Okay, let me share my screen. Let me share my screen on Equifax. Right. Normally you can see everything. And you should see my screen right now. Wonderful. This is Equifax. This is a quality company, obviously a rather large company, $30 billion of market cap. And I like this company. It's just a problem of valuation. I'm not comfortable buying at these high levels. You have a P ratio of 50, 40, forward P ratio of 30. I believe with the forward P ratio of 30, I prefer other companies. So nothing negative to say about the company. It's just a matter of opportunity cost. You have an operating cash flow should be at 30. With the same valuation, I prefer other ideas. But both Equifax and FICO will benefit from a new environment with lower interest rates. If interest rates go down, it will boost the mortgage origination market. It will boost shareholder returns because these companies have some debt and they will be able to get cheaper debt. It will be even more important for FICO because they use the debt to do some buybacks. I mean, they've been using the debt for 10 years, 15 years, and using all this debt to do big buybacks in the past. So, regardless of the valuation, Fair Isaac has been doing massive buybacks and this is maybe a yellow flag for those who are interested right now in FICO, which means even at the time when the stock was trading at a PE ratio of 100 back in late 2024, the company was still allocating 100% of their cash flows toward buybacks. So maybe you don't want to. I mean, this is not the best use of cash. Time will tell if they are right or not, but not my cup of tea. Now that the stock is down to a more reasonable valuation, I could understand the buybacks. I could understand the buybacks, but this is the kind of thing I covered already on my video. So yeah, I like both of them. It's just a matter of valuation now. I mean, even for FICO right now, I know it has rebounded since my video was released, and it's only a few days old. So it can go back down, it can rebound to 2000. Anything is possible. The key to investing in the long term is having a framework and having some discipline on the valuation you pay. I didn't make 25% per year for almost a decade, being loose on my framework and valuation metrics. I am a harsh grader when it comes to valuation. So if I consider FICO to be too expensive, I will not buy it. And the fact that it is maybe bottoming here is not changing the thesis at all. I have strict guidelines when it comes to valuation, and we'll see how it goes. But now, with the new market environment, with lower interest rates, FICO will thrive even more. They can use more debt to do more buybacks. The demand for their products, for the scores, the demand will increase massively. And it is only the beginning. So you have a scenario where it's possible the earnings per share grow 25% per year. That could be the base case or bull case. But I prefer to also look at the bear case scenario. What can happen to disrupt the company? What can happen so that the company is not in a great shape? What will happen if they have a new regulation problem, meaning they don't have the power to increase their prices by a certain amount? Maybe it will be capped in the future. Nobody knows, actually. Nobody knows. Nobody on YouTube, nobody that is investing right now in Fair Isaac knows what the regulation will change. I don't think the competition is a big issue at all. I don't think it's a big issue at all. I just think the regulation will have an impact. In case we go back uh, to 2018 levels, this kind of market environment, when you can not really increase your prices, that could be the main red flag I would see for Fair Isaac. Apart from this, the investment thesis is really simple, extremely simple actually. It's just a matter of price, of valuation. If you are comfortable paying a forward P ratio of 40, maybe some of you watching this live or this replay are comfortable, and that is fine. So maybe you can buy now. Maybe you are not comfortable and you think it's too high a price. And I am on the camp of it's too high right now. Maybe we will be wrong. Maybe for some reason anything can happen in the market. We will never have 100% certainty, but this is it. This is how we invest. We have plenty of other opportunities in this market, so I don't worry much. Okay. Uh, Hi. Do you know Ashtead Technology? It's a spin-off from Ashtead Group. They rent niche equipment and expertise, more asset light and recurring revenue than people think. Yeah, I have stumbled upon this company. Ashtead Technology. Ashtead Tech. Ashtead Technology. Let's see what we have. Actually, no, I don't think I know this one. I know the mother company from Ashtead Group, and you say it's a spin-off. Okay, fair enough. Hi, everybody. Hi, everybody. Welcome, everybody. Welcome to this live. We'll be here for a couple of minutes. Don't hesitate to put a like. I will. Don't hesitate. Please put a like to this live. It will be better phrased this way. So the algorithm helps and boosts this live. So I see you, I see the number of likes. I want the number of likes to go up. So please put a like to this video. The more likes we have, the more lives I will do. So let's see. Ashtead Technologies. I mean, it's a small cap, right? $400 million of market cap. What do they do? It's a subsea equipment rental and solutions organization supporting the installation, inspection, maintenance, repairs, decommissioning of infrastructure across the offshore industry. Okay. Uh, okay. A little bit too complex for me. A little bit too complex for me. I'm surprised this business is growing. Everything in this industry is struggling to grow, so maybe they know one thing or two that competition is not doing. But fair enough. I don't know this company at all. No opinion, no particular opinion on this one. I don't know if it's highly priced or cheap. What's the valuation for this one? P ratio of 8, P ratio of 8, P ratio of 10, price to free cash flow of 36. Something is happening. I suppose they have very high capex. Let's compare this. The net income and the operating cash flow. Cash flow is higher than the net income. So it's all about the capex, and the capex is, let's say, the capex is changing every year. The capex is high, so they produce zero free cash flow. Either they need to reinvest everything because of the industry they are in, or maybe it's just a capital intensive business after all. So if that's a capital intensive business, that's strange. I mean, it's supposed to be a technology, right? But what is the valuation for this kind of business? What is the good valuation you should deserve? I don't know this company at all. Maybe you will find other videos that will talk about this one. But that's a good suggestion. Ashtead Technology Group Holding. Wonderful. What about Salesforce? We have a message from OH that doesn't say hi, neither hello. So let me just skip this one. If you don't say hi, come on, guys. Be serious. They cover all offshore energy plus maintenance plus decommissioning project. Management have third of their maximum remuneration aligned with shareholder. Or for Ashtead Technology, yeah, seems right. I mean, if you have an edge in this industry, if you know something about this very niche industry, if this is inside your circle of competence, go and do some research. I have no expertise in this industry, so my opinion will be bad, I think, on this one. I can only look at the numbers, but from a first point of view, I don't see any any big thing to monitor here. The margins look fine though. Gross margins are high, net margins are high, EBIT margins are high. Why is the stock falling? Maybe they have received some bad news. I know the offshore drilling market is in a bad situation right now and maybe bottoming. They have some debt that is manageable. They have what, $100 million of debt, and they produce how much of operating cash flow per year? Operating cash flow, $30 million. Yeah, they have a lot of debt, I would say. So please check the maturities of the debt. What is the percentage of interest you have on the debt, and why did they got more debt here? What happened? For some reason, they also diluted the shareholders. Oh no, by almost zero. So nothing to see here. Yep, that's strange. Maybe they did some acquisitions here. One acquisition here in 2023, and one acquisition. Yeah, I suppose that's it. One other acquisition here in 2024. Yeah, I'm almost sure. By the way. Okay. Price operating cash flow of 7. Yeah, why not? They have a tiny dividend yield, less than 1%. This is the first time I see this company. Do you have it on your portfolio? Tristan Magno. Did you have it on your do you have it on your portfolio? Do you own it? Could be pretty interesting. Mm, what do you think about Easy Corp in this AAUU situation? Well, tell me you are Hispanic without telling me you're Hispanic. Somebody that calls the United States AAUU is somebody from an Spanish speaking world. Is Corp? I don't know. It's great to find new companies like this. The first time I see this one, Easy Corp, United States-based company engaged in offering pawn loans in the US and Mexico. It also offers short-term unsecured loans. It's like a bank. Uh, Operating segments are pound, Latin America pound, and other international. Fair enough. I don't know this company at all. I tend to shy away from financials. I've experienced too many stories that are negative about financials, and it's a very difficult industry to invest in, I would say. The only really financial pure play I have invested in was Ally Financial because I suppose the company was pretty simple to understand with the buyback machine, and I had the nice gain on this one. But for other financials, I'm not a fan. If that's a local bank, even some regional banks in the US, some are really good, like really, really good. But I will not touch them just for the sake of the exercise. It's fun to analyze them, uh, but it's a little bit too hard to follow them. Even at the same time, I'm not from the US, guys, so I don't really understand the culture. If you look at French banks, be careful. If you have a weak heart, strong heart, be careful because you may get a panic attack if you if you analyze the French banks. You have some dividends, yes, but absolutely horrible returns. I think you can have better, even investing in Europe. Hello, hi. Hello, everybody that just joined this live. Please put a like to this live so the algorithm pushes it to more people. Yeah, sorry guys, you just joined and I'm asking something. Yeah, that's life. That's life. Auction AB is AB. It's good value play. Uh, I did not monitor this one since the IPO. Auction AB. It's a pure play. It's a little bit too early to say if this business is very good at a very good level or not. I would say it's a little bit too early to have a clear opinion on this one. Okay. Can you analyze Storytell AB? What's your opinion? Well, this is. Let's see what we have. Storytell AB. I would be curious to see where you found your companies like this. It's a company in France. Well, you have some courage. Wow. Okay, what do they do? Storytell from I don't know, from Sweden. Okay, fair enough. Sweden operates in the book and publishing sector. Yeah, I'm out. This is it. I don't like this sector at all. I'm out. I don't need to know more about this company. Bye bye. Anything that is book related, I'm not a fan at all. I've seen too many stories. No, it's too hard to make money. Yeah, guess what? Guess what? The company has been making losses and losses and losses every year, apart from 1 year. So maybe they made a divestiture. Yes, they sold some assets. They keep the best one. Yeah, just not my kind of investing. It's a pass. Hello, going up. Hello, Griff. Um, hello, Shah Taldin. Any thoughts about Evo? No, no additional thoughts. Actual AB, same industry as Evo AB. I think you can like it. Can you give your opinion? Thanks. From a hacksaw, yeah, it's too early to have an opinion. Mitchell, morning, my man. At what price would you buy BN? You mean buy more, right? Brookfield is my biggest position in my portfolio, and it was not the case at the time, but I bought at the absolute bottom in 2023 when the tech stocks were rebounding, everything was going up and to the right. I bought one time, twice, three times, like different instances, Brookfield in the 30s, and now it has doubled. So I'm quite confident in Brookfield. It's a good hedge. I would say it's an AI investment without having the risks of AI investments, which means if you have a lot of data center build outs, they will be here and they will benefit. And if it turns out that in 2 years the data center build out story falls apart and you have a little bit of investment but fewer investments, less capital, they're fine. They're fine. It's the way they have built all their contracts, and the management is very good. The forecasts are very good. The execution is very good. I'm very happy with my Brookfield shares, and I don't plan to sell it. I don't think it's overvalued right now. I don't think it's cheap. I think it's fairly priced. I know they have a way they calculate their own intrinsic value for Brookfield, and I don't trust this. I do my own calculation for my own Brookfield stocks. So now, what is great is every quarter the company releases its intrinsic value, and you can see if it makes sense. For example, in the last months, in the last year, sorry, on a year-to-date basis, they did some buybacks, and they did some buybacks at the lows of the April market drawdown. Fair enough, at a price of 40 or 50, something like this. They calculate that their intrinsic value is $104 or something like this. So literally, you have a 50% discount. If they were telling us that the intrinsic value is $100, and if they didn't do buybacks, that would have been a red flag here, because you want them to walk the talk, as we say. You want them to be coherent with their strategies. They tell you the price is worth double, the value is worth double, so they should be doing heavy buybacks here. Guess what? This is exactly what has happened. So I like the way the management is consistent with what they say, what they promise, what they preach, and we'll see how it goes. By the way, Fortinet has been doing exactly the same thing. So pretty good. At which price will I buy? Which was the this question. I think it's at fair price right now. So if I didn't have a lot of Brookfield shares, maybe I would buy more now because of the quality of the assets. Perfectly inflation hedged, by the way. Any drop would be good, but now it's more than 10% of my portfolio. So to answer your question, I will not buy more Brookfield. It's big enough in my portfolio. You know what I mean? Okay. Mm, from Ovind Haugland. Sorry if there is any butchering in your name. Hi, what's your opinion about Salesforce and Storytell AB? Well, Storytell was a book company, so it's a pass, automatic pass. And Salesforce, it's too complex for me, so it's a pass also. I spent some time analyzing Salesforce, and it's a pass. Not confident about the strategy of the company. Let's say it this way. Let's put it this way. I think you can find better. The stock is down, so people like to talk about it, but I'm not confident when it comes to their mode, quality of business. Maybe it is great, maybe not, but I have no edge. I don't really understand. So too complex for me. It's a no-no. I want to invest in very simple companies, very simple thesis. Okay, for me, Patrick, that says for me, Mobrook, Waste Management of Poland, and Entasport Products. Yeah, I know this one. Plus Clinuvel Pharmaceuticals. Okay, you're just sharing your picks. Fair enough. Uh, Bjorn that asks, can you take a look at Itaka Energy? They have had a great run. What is that? Itaka Energy. Let's see. I mean, this live was not supposed to be a pitch your stock live, but it is slowly transforming to be this way, right? This live is literally you shooting your shot about a free analysis. Well, if I don't know the company, it will be hard to have a clear analysis. I mean, you will not get the level analysis that we have inside the coaching program, right? Where we spend literally hours on a company to go deep. It's a big deep dive in the company to know a lot of things and get conviction. Now, I don't know this company. Itaka Energy is engaged in the production and development of oil and gas properties. The company's assets are located in the northern and central North Sea. Mm, if it's a pure oil and gas play, I'm not interested. What is that? Why did they dilute the shareholders? Did they make an acquisition? I guess they made an acquisition here. I strongly disagree what is happening in the oil and gas industry. I've seen so many companies when we were in 2022 and oil prices were high. They promised investors that they will use all the good free cash flows that they have generated when oil prices were high. They will use all the free cash flow to pay off the debt and do massive buybacks. And now that oil prices are low, they manage to pay off the debt and they don't do buybacks at all. They do uh, acquisitions. They make acquisitions. So I was there at the time. I was in attending investment conferences. I saw all the pitches from the management teams. I talked to management teams promising buybacks when the debt was at a reasonable level. Almost no one did it. So the level of trust I have in this industry when it comes to capital allocation, I just don't want to touch them. I want the management to walk the talk. Brookfield is an example. We talked about it. Fortnite is an example. Autozone is an example. If you are not in line with what you say, I'm not interested. So this is an oil and gas play, right? And they are doing a big. They have done a big acquisition here. Okay, strange enough. I don't know. If you only look at the charts, you can say it's an oil and gas play. And to that extent, I'm not interested. I don't want to touch the oil and gas play. If I had one only stock to touch in this oil momentum trade, it would be TPL. And that would be maybe the only one. A few other royalty names, but TPL would be the one. Um, okay, by the way, guys, a lot of you here are pitching stocks. What do you think of this? What do you think of this? If you want to go to the next level, I have a few spots available inside the coaching program. So you can apply to join directly. Like it will be a free call with only you and me, and you will be able to see how it goes inside. Let me just take the link and put it on the chat. So we are a small group now on this live. We are 30 people. It's not a lot. So I take this opportunity to say that we can go and work together on a deep level, something you will never see on YouTube, for example. All the analysis you see on YouTube are shallow. I'll put it this way. If you want to really know what you invest in, if you want to work with me directly for many months to build the portfolio of your dream, please book a call. It's completely free. Like you have literally nothing to lose. And we'll see if we are a good fit to work together. So this is the link I have put in my description and also on the chat. I have a few spots left for this month. Okay, let me continue on the chat. Tristan that says, yes, I have it on my portfolio. What was it? The technology company? Ashtead Technology. Tristan that says, yes, I have it in my portfolio. They do a lot of M&A at an average valuation 5 times EBITDA. What do you mean? They make acquisitions at 5 times EBITDA? EV to EBITDA, I suppose. Which is normal, which is not excessively cheap, not excessively expensive. This is fine. This is fine. Yeah, good for you. If you have an edge here, Tristan, go ahead. Basketer Small that asks, Bonjour Christophe. Bonjour. What do you think of carrying stock? Again, tell me you're French without telling me you're French, right? All the French people want to ask, what do you think about this brand name? Um, all the I don't know why French people only want to invest in French companies. It's very strange, but this is my country. So, what do you think of caring? I don't like caring. I have a belief that if you want to invest in branding, in luxury stuff, you have to invest in the best. And caring is not the best. Caring is having difficulties and difficulties and difficulties. They are in a horrible shape, and any investor in caring is very sad right now. The company is having more debt, and the revenue is decreasing, the net income is decreasing, the free cash flow is decreasing, and I am not enough of an expert in the luxury industry to have an edge. To that extent, I'm out. Next question. Bonnie Woni that asks, good morning, Chris. Thoughts on FICO bouncing 10%? The stock is up 10% since my video. Okay. I said in the video, it's a great company, but it's too high for me. Like the valuation is too expensive. Since my video, the stock is up 10%. Did I change my mind because of 5 days? No. No, not at all. I mean, if during the video I thought the business was expensive, now it has rebounded, so it's even more expensive. So I will still not buy it. I am very strict when it comes to valuation metrics. And this is the reason I made 25% per year. If you are not outperforming the market, maybe it is because you're a little bit loose with your valuation. So maybe if you buy FICO right now, you will outperform the market. This is great. Maybe it will be too high a price. Nobody knows actually. Maybe they will outperform everybody, and everybody should have bought FICO right now. But not my kind of investing. I prefer to invest in other things. I made another video at the same time, and I'm buying Fortinet. I think Fortinet has a better valuation and a better risk reward. So be careful, guys, because you have a lot of videos on the internet, and they share their DCF, their bear case, base case, bull case, and a lot of them are very optimistic. So yeah, do your own work, guys. I am uploading all these videos on YouTube to give you the tools to allow you to make your own analysis, make up your own mind. So be very careful on what you see on the internet. Do your own due diligence. We are not here to do the work for you. Okay. Mitchell, what do you think about Monish Pabrai performance? He has underperformed for the last 20 years. Why do these value investors love Guy Spear and Pabrai? Can we just agree these guys are subpar? I disagree. I think I've seen the table you're referring to about the fund of Monish Pabrai, and you have the comparison with the S&P 500. In this table, funnily enough, they don't start from the starting point of the fund of Monish Pabrai. So before this table, well, what is not shown on this table you are referring to are the first years of Pabrai funds when he largely outperformed the market. And he has had many funds. So with different fee structures, etc. So it's kind of hard to really know his performance. I agree with you. Regardless, regardless if you like his returns or not, if you believe the data or not, he has great picks. And his explanation of Brookfield gave me a lot of confidence in investing in Brookfield. Luckily for me, I bought, and it was the absolute bottom. And now it has grown so much that it's my biggest position, thanks to Monish Pabrai. During this time, Monish Pabrai has sold his position. So Monish Pabrai is a great investor, and you can clone his ideas. He's throwing things at you, right? At the time in 2022, he said Meta was a great double. You could have listened to him and bought Meta. He did not invest in Meta, but he told publicly, yeah, I think it's a good double. It's an easy double. So I think the pitches he has are great. So if you maybe, I mean, you don't have to clone everything, right? You can only copy what fits your temperament, your investing style. Brookfield and Meta are exactly inside my circle of competence, so I copied him. For offshore drilling stuff, I am not comfortable at all. Okay. For Turkish companies, I'm not comfortable at all investing in Turkey. So no. But I believe same thing with Guy Spear, same arguments, same rationale. You can clone the best and only pick the companies that fit your style. Okay. Albert Lopez, why did you decide to buy Autozone instead of Orally? The two are very similar. The two are very similar. The performance is very similar. But I have studied the past 25 years of the companies, the two of them. And I prefer the, how you say it, the zealotry, the fanaticism of the buyback regime Autozone has. I love how Autozone is the buyback king. I have yet to see another buyback king at the same level. And this gives me a lot of hope in the company long term, in the capital allocation decisions long term. For Orally, they do less buybacks. Well, they have started buybacks in 2008 or something like this. They started later. They grow a little bit more than this. And Orally is a little bit more expensive. Also, Orally is more focused on the US. They have many US stores by a lot. AutoZone starts to go international. So just in case, this is a call option on the international markets, like Mexico, for example. So, mm, so far, the businesses are operating wonderfully, but you don't have a lot of differences between the two of them. A few differences, which is the reason I bought AutoZone and not Orally. These are the two big giants, I would say, in this industry. The rest is different, quite different. Well, I hope it was a good answer to you, Albert. Okay, Kala Kaladinsd. Hello. Have you ever taken a look at DLocal? It's an interesting LATAM company that focuses on emerging markets with Mercado Libre ex-CFO as CEO. I think I've seen some YouTube videos on DLocal. So I've seen some people that are interested right now, and it falls out of my circle of competence. So I'm out. For those who don't know DLocal, understandably so, DLocal is focused on making the complex simple, redefining the online payment experience in emerging markets, technology platforms. You get pay if you are a merchant and you make payments online. Okay, you have a few players in this industry. I would say in this industry, it's very hard to have a moat. Everything is trending in the right direction, right? You have a lot of growth. You are in emerging markets, so this is lovely. But I don't. If you look at the qualitative metrics, I would shy away from this industry. The payment industry is very, very hard to follow. I would say if you are watching this live or this replay and you are interested in DLocal, good luck doing the due diligence, seeing the competition, seeing the margins, the take rate, etc. Be careful with the qualitative aspect of this investing, but it can be a 10x from there. I mean, it's very small. The market cap is $3 or $4 billion. It's quite small. If they succeed in a few years, maybe they are going to be the leader. But it's out of my circle of competence. Okay, Daniel that asks, hi, what is your opinion on Wolters Kluwer recent declines despite beating earnings? Might start making the valuation attractive. This is the first time I see this one. Okay. Let's see what we have. Wolters Kluwer, a company from the Netherlands. What do they do? A global provider of professional information software solutions and services in health, tax and accounting. I like it. Health, I don't like. Tax and accounting, I like. Environmental, social and governance, finance, compliance, and legal. More than 60% of the revenue generated in North America and 30 from Europe. It has a market cap of $30 billion. Margins are high, and the business is struggling to grow. Growing a little bit, I would say single digits, almost no growth for the revenue. They have improved the margins over the last few years, so net is growing. And the free cash flow is trending up and to the right. And they give dividends, dividend yield of 2%. At the same time, they have increased the buyback program. Pretty good. You know what? Let me save it, just in case. What's their debt level? They have what? $4 billion of debt, and they generate $1.5 billion of free cash flow. Okay, why not? P ratio of 20. Yeah. What's your what's your understanding of this company? Who asked this question? Daniel. Did you follow this company? Do you have this company in your portfolio? Do you have any specific things to share with the audience on Wolters Kluwer? Because I have no clue. This is the first time I see this company. Thanks for bringing it up. Okay, are you considering Novo Nordisk? No. What do you think about those three picks? Which ones? Patrick is just asking, what do you think about those three picks? Well, he didn't mention any pick. Oh yeah, for me, Mobruk Waste Management in Poland. This one and this one. Mobruk. I mean, I'm always happy to find new companies. Maybe I will call this live stock pitch live, stock pitch session. What is that? Waste management company in Poland. I love the waste management industry. It's it's very boring and very profitable. And depending on the country, it's either public or private. When it's private, it's great. So Mobruk is a Poland-based company engaged in providing waste management services. It collects, recovers, and disposes of hazardous and non-hazardous waste. Fair enough. $300 million of market cap. Oh, it's very small, very tiny. Did you compare the margins with competitors and even counterparts in the US in the same industry, like waste management, for example? Pretty good. Pretty good. From what I see, revenue has stabilized at a high level. What is causing the increase in revenue for this company? Do you have more waste in Poland? Like, is it you have a clear correlation with GDP per capita? Why is net income trending down? Do you have like a COVID booming effect? Because before COVID, like before 2018, the company did not generate a lot of net income, and it has boomed in 2018, 19, 20. Did they get some public contracts with municipalities, and now these are turning down? Is it a competitive industry to be in the garbage industry in Poland? It depends. Every country is different, so I have no opinion on this one. They recently took on some debt. They have a dividend yield of 4 or 5%, pretty good, pretty decent. They buybacks or dilutions. Yeah, it seems like everything boomed in 2021, and now things are going down again. The question you have to ask is why? Why is free cash flow becoming negative? So I suppose they have added new plans, new capex plans. So maybe they need to reinvest a lot of their earnings for more capex because this is a capital intensive business. And how long will the capex cycle last? I can't answer this question. You have to do the work. Okay, fair enough. But it seems like the stock has a strong correlation with revenue. From what I see, The stock price is following revenue. So maybe you want to track what are the three key levers for the revenue growth in the future. Anta Sports, yeah, I know this company out of my circle of competence. And Clinuvel Pharmaceuticals, it's a pharmaceutical companies out of my circle of competence. Also, please don't send me pitches about biotechs or pharma companies. I will not analyze them. Let us continue. Okay, very well. Let me continue. Canadians. Okay. I'm curious, do you actually do DCFs? Yes. On my videos, when I analyze stocks, we always do the DCF to analyze companies. Look at the bear case scenario, base case scenario, bull case scenario. The goal is to determine with some good accuracy what will be the future cash flows of businesses, discount them to present value, and see what you have. If you consider it to be a buy, a hold, or a sell. So the DCF is very, very good. The more simple, the better, I would say. Sometimes you have DCF models that are very complex. I don't like them at all. But DCF, my personal philosophy is that either the company is cheap enough that I don't have to do DCF or I don't invest. Yeah, anything can work. Um, Hi, what do you think about the situation with Landbridge and the report from Gotham City? I didn't make a video on this short seller report on purpose because it created a lot of heat in the community, which is not good. I uh, I know how it feels to just have a big question mark. You are invested in the company and you have a short seller that attacks your company. And I'm afraid I will still not make a video about this one. But I can make a few comments. I read the report for both Landbridge and for TPL. The report was okay. Some things were true, some things were false. It's always the case with short sellers report. But I like to read everything about the companies I own. I remember when I bought MSCI, I read all the negatives before buying. So you will always have the other side of the coin, and it's good to be rational and see what doesn't work. The contract, the price per barrel for land bridge, how do you negotiate this? The link with water bridge, the governance risk. Yeah, but we already knew the governance risk. So yeah, I read the report and learned some things. So pretty interesting. Did I sell? No, not at all. And after this, a few people on Twitter panicked after this report, and they attacked Gotham City, saying that the report was bad, horrible. I mean, they are doing their job. You please be polite on Twitter. I have a very kind community, so thank you for this. You are not uh, mean to other people, and I love this, and I want this to be the case for many years like this. You're very smart. You are very, uh, uh, I would say, smart, and you know what you say. I would say most of the time. It depends. One guy or two, they don't know sometimes. So you are fast, you are smart, you know what you say, and you don't get heated when the situation got strange, for example. But on Twitter, I saw some people that were criticizes Gotham, and Gotham replied to these bad comments, and it was a back and forth. I didn't like this. Not very professional. But yeah, pretty interesting. Please read the report from Gotham for TPL and for Landbridge. You will learn some things. And now it's your turn to see if the information is right or wrong. It depends. And if you don't know if it's right or wrong, it's out of your circle of competence. It means you don't know enough about the company to decipher if the information is right or wrong. For example, let me just say this, and after I will stop talking about this topic. The short seller report said that TPL was supposed to be a growth company because revenue is growing, earnings are growing. But at the same time, the number of employees has not gone up massively. So, how can you be a growth company if you don't hire many people? The answer is it's a trust. And it was supposed to be a trust, but it just changed to a C corp. So that's it. You don't hire a lot of people when you are a trust like this. So it was a bad point from the report, but actually I don't see this as having a lot of sense to say this. It's a growth company, yes, by definition, because of the quality of the assets, but they don't need to hire anybody. So it's not a point to say this. Okay, Jap Clever that asks, what about the French company Rubis? Not interested. I believe it's a company in pharma, right? Oh, maybe I'm mistaken. Ah, no, it's not at all a company about pharma. Rubis specializes in bulk liquid storage and the distribution of petroleum products. I'm out. If it's linked to the oil and gas industry, especially the transport of oil industry, I'm out. You see a similar pattern to all the companies I mentioned on my YouTube channel, right? You see a pattern to all the companies I have in my own portfolio. By the way, guys, my portfolio is public. You can track my portfolio, you can track my performance. I'm one of the few YouTubers that publicly shares his portfolio live. It's on my description on my YouTube videos, even this live. You just scroll down on the description and you have like my portfolio on eToro. And eToro is a public platform. You have my portfolio. You can literally copy my trades if you want. And on eToro, you have this button called copy trading. So completely for free. If you don't want to do the work and if you want to have the same performance that I do, you create an account on eToro and you click on copy trade, copy, boom, and you will have the same portfolio that I do. And if I buy something, you will buy at the same time. If I sell something, you sell at the same time. And it's great. And I have more than $500,000 in AUM on eToro. So you can clone what I have, you can take inspiration, but you can also not copy me, but well, actually you can copy trade me. Actually, it's not as if I invested your money, but it's a alternative fund. I would put it this way. So if you are lazy, or if you don't want to spend the time, or if you don't think you can outperform the market the way I do, you can copy trade my portfolio, and I will do the work for you. Literally, you can spend the rest of your day at the beach, enjoy the sun, and I will work for you. And I have more than 300 people, 400 people that are doing this, that are copying my portfolio and chilling the rest of the time. So, in case this is you watching this video, yeah, it would be reasonable. It's completely free. It's completely free. You can just copy trade my portfolio and you copy my moves. You will have exactly the same performance, so you don't have to do the work. And okay, so back to your question and your company. You see a pattern with all the companies I have in my portfolio. These are quality compounders. If you look at Rubis, do you think it's a quality compounder? Do you think that it is growing the revenue double digits with good capital allocation decisions, not a lot of debt, filled with cash, doing buybacks? The answer from a first point of view is no. The net income is struggling to grow. The revenue is struggling to grow. The company is having more debt. The ROIC is not high enough. The free cash flow is not moving. I'm out. Next question. Hi, from Kolarov1. I remember you. Hi, I am buying Adobe and ASML as an AI play. Please comment. What do you want me to comment on? These are good companies. These are perfectly good companies. I'm not confident enough to have them on my portfolio, but these are good companies. We have the first French comment. Please, I know we have a French audience. Maybe like 10% of my audience is French. I'm tracking the YouTube data. So I have a small French community because of the French accent. Okay, fair enough. Please refrain from speaking in French so everybody can understand what you say. You have a few rules in this life, right? Please say hi. Please speak English. Please be polite. I have no moderation. This is just you and me. So you have only three rules. And fourth, put a like to the live so we can do more of these. The algorithm recommends more of this live. We are more than 40 right now. Beautiful. Anyway, let me translate. Tai that is asking, what do you think of Crocs? I may do a video about Crocs in the future. It's an interesting arbitrage play, value play. Norbert Lou is buying. Pretty interesting. I am doing the due diligence right now, to be honest. You have the exclusivity of the information on this live. Thank you for joining this live. Oh, thank you for the uh, thumbs up, by the way. I see this increasing. I am doing some heavy research on Crocs right now. Not to have like 10% of my portfolio, but just to have maybe a starting position, see what we have, cash flow generation, the hey dude acquisition, what was said at the time, what do you have with the management change that is happening right now? Somebody is leaving, somebody is joining. What has been the track record of the company? Now the company is quite cheap. They generate, let's say, $1 billion of free cash flow, and they have a market cap that is a $4 or $5 billion. So, what is the sustainability of this? In a few continents, in a few countries, they buy more and more of these kind of shoes, and you can customize them with high margins. So pretty interesting, but not in my portfolio. Uh, SaaS Masters that asks, "Hi, what is your minimum target CAGR when buying new stocks?" It depends on what you want. I would say minimum 10% stock is fine. Now, what are we talking about? Are we talking about? Can I stop sharing this for one moment? Boom. Okay. It depends. If on your portfolio you have a few buckets like aggressive stocks or defensive stocks or neutral stocks, would you have the same discount rate for all of them? I don't think so. What is your minimum CAGR for a defensive play, for an aggressive play? It depends. But I would say your base case could be 10, 15%. If realistically you can't make 15% of an investment, I'm not a fan. So for a defensive play, it's fine to have 10% CAGR. You will, I mean, right now, if you buy Berkshire Hathaway, you will not make 20% per year. But I think you can pretty reasonably make 10% per year. And it's okay. It's a defensive play. If the market crashes for some reason next year, for example, Berkshire Hathaway will thrive and will go lower, but less than the market. So actually, 10% for defensive play, 15% base case. Okay, let me continue. Ovin Hogland that asks, is Hemnet Group a good play in this environment? I don't know this company. It's Sweden's biggest property platform. Too complex or interesting? Property platform, you mean real estate? Like Zillow? I don't like. I don't like this at all. So no. Daniel that asks, I currently own Wolters Kluwer. That's the company we analyzed like 20 minutes ago. They are leading or at least among the leaders across all the business segments that are involved in. Okay, it's a tech company that is thriving. Fair enough. Nathan that asks, Uber, guys, please be respectful. If you don't make sentences, I will not comment on your question. Please say hi and put some a few words at least. Say hi, say thanks, but please don't put tickers. It's a lack of respect, I think. Power, Christoph, you should really look at 3i Group PLC, still undervalued. Yes, I looked at it. Pretty good. Pretty good. Not my kind of investing. I have enough investing plays in my portfolio, but pretty good. Vincent that asks, you mentioned you know Ashtead Group. What are your thoughts on it? Out of my circle of competence. Too difficult for me to see the trends in the whole industry. The financials look good, but too difficult to spot the trends. Ernest that understood the rules. Thank you, Ernest. Hello, Christophe. I'm curious, what is something you learned too late in investing that you wish you knew sooner? Companies can over deliver. Great companies will most of the time over deliver, and all the estimates will be wrong. You have great quality compounders that were accused of being priced fairly, and they always did better They always did better than expected. It is very surprising when you see this firsthand. I'm thinking of O'Reilly, for example, always outperforming what they say they would do, always surprising the market in a good way. The management team is great for that. And once you know this, what can you do? Would it mean that you will overpay for quality? Maybe. What is your threshold for overpaying for quality? It depends on you, actually. And if you don't know, if you don't have a framework, you are missing out. As always, the first link in my description is my coaching program to uh, so that we can work together and I literally help you implement the framework for your profile. It depends. It depends on everybody. So if you don't have a framework, you're missing out. Let me put the link in the chat so that if somebody wants to join my coaching program, you can literally book a free call with me so we can work on the um, the good framework for you, actually, the overpaying stuff. Okay, fair enough. Let me continue. What is your opinion on Harvia PLC, Finnish sauna company? Good fundamentals. Yeah, I checked it already. Let me check this. Normally, you can see my screen. Harvia. Can I see it here? Yeah, I know this company. Yeah, I saw this one on Twitter and I analyzed it a little bit. It's a $1 billion market cap of a company. The margins are okay. The valuation is a little bit high for a sauna company. I don't know. What do I know about sauna, right? Is it a simple industry? Is it a complex industry? What are all the costs that are linked to the sauna? You need electricity, you need the heating circuits, you need the. Is it a subscription model for customers, like a fitness environment, like Basic Fit, or is it something else? It's on my list of companies to watch actually. I have read a few things about Harvia. Was okay. Was okay. It's an exotic play. I like it. Actually, I like it. This is the kind of company with the market cap of $1 billion, and I wouldn't be surprised if it goes to $5 billion. If the Finnish people continue to love this, and you have more demand for saunas, life is good. So why not? But I have to do the analysis on this one. Uh, Hi, Ivan. Do you own this company? Good fundamentals. Do you have any specific questions about this company? Please answer in the chat, and we'll get back to you. Why did you invest in Lam Research instead of ASML or other fab equipment makers such as Amat, KLR Corp, etc., Tokyo Electron, etc.? That's my favorite one. The management team, I like it better. The focus on shareholders' return, I like it better. And the cheapness was okay. The valuation was reasonable. What do you think of Palo Alto Networks from Vasishta? What do you think of Palo Alto Networks? Good margins, but very aggressive acquisitions. I'm doing a super deep analysis on Palo Alto Networks, actually. I have watched all the interviews from Mr. Arora, the CEO of Palo Alto Networks, maybe all the interviews since he joined in 2018, and I will not invest in this one. I think the cybersecurity industry is great. I'm not a fan at all of acquisitions. So yes, they are growing. Yes, they are the leader. Yes, in terms of market cap, that's the biggest company in the cyber industry. Yes, the CEO is a genius. Wonderful. I would love to invest in this CEO, but the capital allocation decisions, I prefer Fortinet. Nathan, on est là. We are here. Je like, I liked. Wonderful. Thanks for putting the English translation. Thank you for liking this video, liking this chat, this live. Okay. Daniel, I would love to see a future video from you doing an analysis of Wolters Kluwer. I have a high conviction in them and will continue adding more in my portfolio. Yeah, fair enough. Fair enough. Polo Mono, is it a good idea to DCA into alpha metallurgical resources or should we buy now? I'm not a financial advisor. I'm not here to tell you what to buy, what to sell. I'm just sharing my analysis, sharing my journey, sharing my stocks, favorite stocks, and helping you out having a framework. I'm not a guy that will tell you what to buy, what to sell. Actually, yesterday I released a video, a testimonial video from one of my clients, Charles, that has great results right now with his portfolio. Very happy. He joined us a couple of months ago. And he joined us because he didn't want recommendations. He wanted to know the tools, the framework, how to do it by himself. So I will not tell you to buy or to sell AMR. Please do the work. What I can see is please read the latest earnings report for the company. You will get very important information. And investing in coal plays are risky for retail investors. You see what is happening with Monish Pab right now. All his stocks got destroyed, and people are very mean to him, to his performance. So I'm sure he is wise enough to not care, but not everybody is like Monish Pabrai. So now that his performance is down, bad, AMR is going down. You have other coal plays going down, offshore drilling going down. People are very mean. I hate to see this. This is very bad. The goal is not to criticize other people. I mean, the goal of what we do here is to get wealthier. It's not to be smart. It's not to be the genius guy in the room. It's just to get richer, right? So why not help each other out? I don't understand why people can be mean like this, criticize so many people at the same time. So yeah, to all of this to say AMR is risky if you compare yourself to other people. You will have peer pressure and on your shoulder, and maybe the stress is not worth it. So be careful investing in AMR. I'm still an owner. I still own AMR. Tai, I will speak English, and thanks for your answer. Wonderful, wonderful. Okay, Tristan. Hi again. Do you a top five? Do you do a top five stocks in Nordic European market? Not a top five on valuation, but on quality and mode. More a list to follow depending on the stock price. We actually did this on the inside the coaching program. I don't think I will share this publicly. It's only exclusively to people that inside the coaching program and we work closely. Like the best ideas I have in Europe, including Scandinavian ones. I believe you if you want free content, you have other channels that will do the work. It will be great content. But for specific companies like this, you have opportunities. I'm only sharing this inside the coaching program. Uh, no, okay. Tom Ack that asks, "Hi, we want to hear about your trade-off on Evolution AB. I have not made any trade on Evolution AB recently. Nothing has changed for me, at least." Nathan, I didn't know. Sorry, I just wanted to know your thoughts about Uber. Lol. Yeah, now you know how to make sentences, right? Mm, Hi, Chris. Love your work. Level headed and give good insights and fundamental analysis into great businesses. Thank you. Especially enjoyed the one on FTNT and researching further into the stocks before buying. Yeah, guys, do some analysis on Fortinet. I cannot tell you to buy or to sell. I can tell you that I bought personally, and I can also tell you that I want to buy more. I am doing a deep, deep, deep dive in the cybersecurity industry on everybody. all the interviews, all the earnings reports, all the moments when Fortinet crashed in 2023. How did management react? What did they do? What did they sell, etc.? Uh, is it making sense? If you look at what they are saying right now on Fortinet in 2025, billings are down a little bit. Like, I mean, it's a 15% growth, right? But you have a slowdown in the sector, in the company. So is it making sense? So far, so good. Actually, I will maybe shoot a video tomorrow about Fortinet because you had some news about the investment thesis. So some new developments that are even more bullish on Fortinet. So I like the cybersecurity industry as a whole. Fortinet is my go-to stock. Let's see how it goes. Maybe I will be wrong. Maybe I'll be right. You cannot have a 100% hit rate in this industry. So you have to stay humble and hope for the best. Do your analysis and see how it goes. But yeah, thank you for your comment, Corbenic second. As a side note, what are your thoughts on hotel franchises? I don't like. I don't like franchises. I think it's very difficult to have a moat in this industry. Very difficult to be profitable in this industry. Only the luxury hotels will thrive, in my opinion. I would only consider the luxury hotels, luxury airlines, if I had to invest in them. But as a whole, the industry, I'm not a fan. Ernest, what do you think about Murphy USA? Yeah, it's pretty decent. Last time I checked, the stock crashed because of decent earnings, but nothing surprising. But they are doing some good buybacks. While the stock is continuing to drop. It's a small company. It's growing nicely. P ratio of 15. And uh, okay, what has happened for profitability since 2022? I'm not sure. I like how they are buying back their own shares meaningfully. Like in 2022, they bought back 12% of their shares. 2023, they bought back 4% of their shares. 4%. Ernest, what do you want to know about Murphy USA? Do you have any questions in particular with your analysis? Please comment on the chat. Okay. Hi again. Have you been monitoring Hermes International? Yeah, I'm French after all. Every week I monitor our best French stock, best French company, which is Hermes. And yes, I'm monitoring Hermes. Martin that asks, "Hi, what do you think about Edenred, French company, cheap, seemingly strong moat, value investors talking about it?" Yeah, I know this. I know. It's a good question. It's a good question, and the company is quite famous in France. International investors don't know this company, but in France, everybody knows Edenred. And it's a value play that may rebound, maybe not. I'm not a fan of the business model. It's a no for me. I don't like. They can be disrupted quite easily. Hivin, hi again. No, Hermes. Caladins. Can you recommend some more advanced book for investors who already know the basics? If you don't mind, of course. Yes, I would say if you want intermediate slash advanced book, you have stop sharing. You have Richer, Wiser, Happier. That is great. Richer, Wiser, Happier. You have Quality Investing. That is great. These are two books if you are intermediate slash advanced. And if you want to be reading a book at an advanced level, you have Poor Charlie's Almanac. It's here. Here we go. More advanced because it's about philosophy, quality, ethics. So it's the ultimate book to go to analyze companies on the deep level, the quality side of any investment idea. Looking at the numbers is sometimes not enough, and this book will help you. Yeah, I recently shared a list of the best books on my coaching program. It was a great list, and you had like many opportunities. Kides that asks, "Hello, do you trade options?" No, no. I only buy stocks without any leverage, no crypto, no options, no. The most simple investment you can make. Firas that asks, "What do you think about UNP?" Mm, it's a good question. I think I can find better. Yeah. Vojare that says, "Hi, can you look on company Cadeler?" First time I see this one. It is a renewable play. I'm out. Trading at interesting valuations with nice growth expectations. I'm out. I'm out. It's a renewable play. Well, for the sake of the exercise, let me just check it. But I'm already out. You don't see me. Cadeler. Sounds Spanish. Cadeler. Denmark. Okay. What do they do? It's an offshore wind farm vessel contractor. I'm so out. Yeah, not my kind of investing at all, actually. Not at all. And I've been working in a ESG fund. I've seen these companies go up, go down, management lying, management having strange expectations, very hard to invest with a positive return on investment. You are filled with debt, you have a lot of capex, you struggle to make free cash flow, you dilute your shareholders. Very hard to make money in these kind of industries. And for all these reasons, because of the lack of the free cash flow, for example, or I'm out. I will not even look at it. Thank you for the recommendation, but everything that is about wind turbines, offshore things that are, no, I'm out. Uh, Even that asks, "Hi again. I think Snap has potential. It's an app that everyone uses in their daily life. The stock is hated in the recent years, but in the long term, is it potential here?" I have only one chart to show you. I have only one chart to show you. Let me just find it on my computer, and I will explain my investment thesis. Is in one chart, very simple to understand. Chart. No, no. A lot of people want to know about this company. No, no. Maybe I don't have it here. Snap. Um, you will see what I'm talking about. Snap. I know the company. The the company is quite famous. I've used the app when I was a teenager, when I was younger, and the management team is a little bit concerning. Let me show you only this. Okay, stop sharing and share this one at the same time. Okay, this is it. This is the only thing you need to know about Snapchat. Yes, they have tremendous opportunities. They have what, more than 600 million users. They have all the young generation that is using Snapchat. They are starting to monetize it. They have implemented AI in it. Okay, let's see. Has the company been profitable? Never. And who is getting richer here? Shareholders or the management team? If you look at this chart, you have two lines. The red lines, so losses every year. So the company is being less profitable and less profitable and less profitable with losses and losses and losses every year. And the yellow line, the SBC, the stock-based compensation, stock options, salary, management. So the company moves. It's been 7 years, 8 years. Shareholders are not richer. The management team is getting richer. So I don't like this at all. I think the incentives are bad, and I don't like Snapchat for this reason. And as long as it is the case, I will never invest in Snapchat. For some investors, it's great. Every time they report earnings, the stock drops 20%. It's a good trade if you are a trader, you want to short it one day before earnings, because every quarter they report earnings and the stock drops. Boom. And the stock has been oscillated for a while now. So you really can't compare Snapchat with Google or Meta platforms. Really, you can't. I don't know if you are using this app, but it's very different. I mean, how can it be so difficult to put ads? They have ads actually. They have ads, but it's not profitable. The company is not profitable. I don't like Snapchat at all. I think you have multiple red flags. I have shown you one, but you have other ones. So please do the due diligence and have some fun. Okay. Mm, okay. Nathan that asks, I currently own Palo Alto Networks, Uber, and Google as core positions. Do you think they are well positioned in their industry for growth? You should be the one knowing this. I've heard you don't appreciate Palo Alto Networks, but Fortinet and Palo Alto Networks are my favorites. I've said nothing negative about Palo Alto Networks. Actually, I've said many things that are positive for Palo Alto Networks. I like the company a lot. And to comment on your positions, you should be the one knowing this. If you don't know if your companies are very well positioned to benefit from the new world, it means maybe you don't know what you invest in. And that is quite concerning. It is quite concerning. Next one, Polo Mono. Any thoughts about GTT, gas transport, and Technigas? Yeah, it's pretty good. It's pretty good. Yeah, yeah, I like it. Laurent that asks, "Hello, Christophe. Why no Chinese exposure? I am looking into Hong Kiao Group, an aluminium producer, and I would and I would appreciate your POV." Thanks for the question. I have been investing in China since 2018, so I know how it is to invest in China. I bought Alibaba, Tencent, Prosus. I know the. I've been following Beidou. I've been following a lot of the names, the JD.com, PDD, and even small companies. What is the name? Daco Industries. I mean, even small caps that had some potential. It's very hard to invest in China. So I decided to sell out of China completely at the beginning of 2025 because it's been so many years that dragged on my performance. So it's a tough decision to make. And in terms of timing, it was horrible. But I sold out of Alibaba. Guess what? 1 week after this, 2 days after this, Alibaba started a bull run and it was up 50%. Yeah, that's life. That's life. And still, I'm still outperforming the market year to date. So no regret. That's life. And no, I don't want to have anything to do with China right now. You have a Quecho Mutai that is excellent, Tencent that is excellent, Prosus that you can love, that is a hedge to have exposure to Tencent. The ticker symbol for Prosus is PRX. PRX, yes. You have PDD that is still growing massively. Baba and JD.com that are cheap. Antasport, pretty good. You have a few companies, but I prefer to only invest outside of China. Okay. Ernest, hello again. Please look into Baltic Classified Group. Do you like their business model? Well, come on, guys. Give me quality companies. Don't give me uh, drilling stuff, renewable stuff. Please, this is a channel about quality investing. I want to invest in quality, right? Let's not waste our time on companies that are not quality. Let's see what we have. Baltic Classified Group PLC is an online classified group in the Baltics which owns and operates various vertical and generalist online classifieds portal in Estonia, Latvia, and Lithuania. Its online class fields portfolio comprises vertical online classified portals, real estate jobs. I don't understand what they do. What's a classified platform? You mean classified like private, uh, classy, like small, small things to say, like it's a marketplace. Uh, short Short-term services, yeah, like it's a marketplace for products and short-term services, I guess. Little jobs, little things to say to sell, cars, like eBay, like Facebook Marketplace. I don't know how to understand this business model. Lithuania, market cap of $2 billion. They have great margins for a business that is about a marketplace. The margins are spectacular for for this kind of business. So I don't know if it's the right business to be in. Why did they have so much debt in the past and now they are without any debt? Revenue is growing. Net income is strange. Maybe it's because of the IPO. When did they IPO? 2021? 2021. Okay, fair enough. And now they are boosting the profitability. They are using the cash flows to repay their debt. They are doing, they're enjoying their cash flows massively. Something happened in 2023. Something happened in 2023 and the company became widely profitable. Here, boom. What is that? Uh, H1 2021. What happened here? Something definitely changed. And now the company has so much cash that they are paying a dividend and they are doing some buybacks here and there. Yeah, why not? Dividend yield of 1%, PE ratio of 40, forward PE ratio of 30. Definitely something that I will add on my watch list. Thank you. Baltic Classifieds Group. I am adding it to the watch list. Daniel, nothing I owned, but what are your thoughts on LVMH, L'Oreal, or other French luxury premium sector? I was starting doing some research on LVMH. These are good businesses. These are really good businesses. LVMH, Hermes, L'Oreal, good brands. It's cyclical, depends on the demand. LVMH has been tapping into lower markets, lower category, like the average people, and Hermes is still luxury. We will see, but pretty good businesses. If you have an edge in this sector, if you know somebody that is French, pretty good. So you asked, what are your thoughts, Daniel? My thoughts are, these are good businesses, but I think I can find better. Okay, hello to everyone joining this live. I don't know when it will end, so shoot your shot and ask your question. If you want to share an idea, please only share quality ideas. I will not waste my time analyzing bad companies. And please leave a like to this live so the algorithm pushes this live. Mm, let's see what we have. Nathan, you said you don't like the fact that they are acquisition heavy for parallel to networks. And I'm asking for your thoughts, not confirmation about Uber, Google, and parallel to networks. You're asking for my thoughts about if they are well positioned for the next industry. Depends on your own thinking, actually. Uh, why is it so complicated when I ask you your thoughts and asking to do my analysis? I've done it. Just curious what you think about them. Oh, I can tell you, I own Google, so I'm on your camp on this one. For parallel to networks, I don't like companies that are, how to say this, serial acquirers. Serial acquirers. I prefer companies that are efficient and they don't rely on acquisitions filled with debt and dilution. So different mindset. For example, you have a few interviews about Fortinet, why they don't make acquisitions like some other players in the cyber industry. They talked about how the majority of the acquisitions fail because of lack of efficiencies. You don't have a lot of efficiencies when you make acquisitions. If you look at the track record, is horrendous. So yeah, they say maybe you will miss out on some opportunities, but we want to build in-house, and they have done so for a while. They have a lot of patents. They know exactly what they're doing, and for the vision for parallel to networks, they want to buy small companies that are a potential threats. a potential threat to them. Small companies with small teams that are doing an excellent job that will be maybe it will be the leader of tomorrow. So they buy when they are small without before they become big. Investomat, good evening, Christoph. Hello. Appreciate you for your own awesome live stream. Thank you. And taking your time to our questions. What is your opinion on Robert at SA or Lotus Bakeries? Both are high quality family run. I love, and will you ask either one or the other one? Lotus Bakeries is great. Lotus Bakeries is a great Belgium. They have this small biscuit company. Well, small is big enough, and the stock has fallen from a very high multiple to a reasonable price, but it's still too high a valuation, too high a PE ratio for me. So I'm not touching it. But it's definitely on my watch list. I'm monitoring every week what is happening with the Lotus Bakeries. Everything is trending in the right direction. I love it. I love Lotus Bakeries. I have nothing negative to say about the company. I'm just waiting for a good valuation, and I think it's a good potential buy, but not now for me. Not now for me. Polo Mono, do you plan on starting Berkshire 2.0, sir? Sure. Give me a couple of billions of dollars and I will start. John Rogers would love your thoughts on Universal Music Group out of my circle of competence, unfortunately. Uh, does Bill Ackman invest in Universal Music Group? Maybe that's another one, maybe another Universal. So maybe you can check his slides, what he has to say about the music industry or this kind of thing, but I'm not into this. I would say it's very difficult to invest in this kind of industry. Although Lotus Bakeries and Robertet don't have a significant moat, I disagree. Lotus Bakeries have a moat. They have a moat and have a pricing power. Robertet specializes on the high-end raw materials for fragrances and aromas. Yeah, let me check on Google Focus what it says about Robertet. Robertet in our French investor universe. Robertet is often talked about. Its market cap of $2 billion and seems interesting to a lot of people. So maybe it's worth digging into this company. I don't know what they do exactly. Operates in the aromatic products. It is engaged in the development of flavor and perfume additives and ingredients. Good, good, perfect. Reminds me of a small cap I did some research on. The activities of the group function in the raw, okay, perfumery flavoring segments. Yeah, of course. If you have an edge, if you understand the business model, why not take a look at this company? Seems like all the charts are trending the right direction. Yeah, fair enough. Fair enough. PE ratio of roughly 20. Why not? Why not? Let me add it to the watch list. I never did a deep dive on this. I have not done a deep dive, Robertet. So why not? But I don't have any thoughts right now. Thanks for the response. I've been looking into Adyen. It's a digital payment solution. What's your thoughts? Equally, what I said 30 minutes ago, I don't think digital payment companies are good investment for my portfolio, for my kind of investing. So these are my thoughts. I will not invest in Adyen. I've been monitoring the company since 2023 when nobody wanted to touch Adyen in 2023, and I will not touch it. I will not touch it at all. Power led that asks Christoph, have you ever looked at Daker's Outdoor Corporation? Yes, yes. I like it. I like it. All the charts are wonderful. Charts are wonderful. I'm doing some research on it, but I'm not sure if it's really inside my circle of competence. So I'm not sure if I will buy it. It's an apparel company after all. They sell shoes, right? Footwear, apparel, accessories, and it's all about demand. It's all about the public. And at the time, it was the worst performer of the S&P 500 a couple of months ago. And if you look at the charts, everything is trending up. Revenue trending up, net income trending up, zero debt, a lot of cash, free cash flow trending up. They do buybacks every year. Everything is trending right, but I'm not sure I really understand this business model. When I say this, it doesn't mean that I don't understand a shoe business. It's quite easy. But in the next 5 years, who will win in this industry? I don't know. So this is what I mean when I say it's outside my circle of competence. By the way, in a few days you will have a video about the circle of competence. I don't know when exactly, but it will be here in a few days. Okay. What do you think of? Is that the ticker for Dinopolska? 10lock09 that ask D. I think it's Dinopolska. Yeah, it's Dinopolska. Obviously, when you talk about the Polish names, Dinopolska always comes. I've been following Dinopolska since 2021. Like it's been 4 or 5 years. I've been following this one and I did not grow any confidence in the peak. The valuation has always been high. It's a grocery store in Poland, successful, and now the stock has dropped because of the comps, because of the revenue growth rate. Fair enough. It's a good company, very good company, I would say. The valuation has dropped in the past. It was not trading at a high valuation. What has been the PE ratio over time? Can I have a chart? Yes. Uh, Fair enough. When I looked at it, and I started to look at it in 2021, PE ratio of 40. Even at the crash of 2022, at the low point, it had a PE ratio of 27. At the same time, you could have bought Google at the crash of during the crash of 2022. Why would you buy Dinopolska instead of tech companies based on the analysis? I don't know. I have more confidence investing in tech companies that got destroyed in 2022. Now the valuation is trending down again. PE ratio of roughly 20, 25. Why not? But not for now. Not my kind of investing. I'm not sure actually. It's not of. It's not really inside my circle of competence. Well, I see we are a little bit more than 40 now. Welcome to the people that joined us. There are a few rules in this live. Say hi, leave a like for the algorithm, and it's wonderful. We have fun. We have fun. Only pitch high quality companies. Dino Polska is a quality company, so that's great. Um, Thoughts on Okta? Sticky product, cheap valuation, and we benefit from securing AI agent, non-human entities, and other cybersecurity tailwinds. This is too strange for me. This is what I will say. This is such a strange company for me. I will not touch it. It's trendy, but I've never really uh, understood what people see in Okta. This is what I have to say. And also, I only invest in companies that are profitable. Turns out Okta is struggling to be profitable, so I'm out. This is not my kind of investing. Pavon investing. Hi, Christoph. What about Marvel? No, I have enough cheap companies, cheap component companies in my portfolio. I don't want any other one. Thank you, Christoph. Yeah, you're welcome. Do you live in France? So far, yes, but I'm traveling right now, so it will maybe change. Polomono, is there a way to evaluate pricing power beyond looking at margins? Yes, quality metrics. How can you? I mean, even a growing revenue will not help you assess the pricing power of a company. For example, you can have revenue that is growing, but all the growth in revenue is due to more volume. They sell more stuff. It's not about pricing power. So actually, revenue growing, you're not so sure. And sometimes for some companies, they will tell you the price increases they have. For example, for MSCI, you look at many interviews, they say out of our revenue growth, 30% of this revenue growth is because of the pricing power, price increases. Okay, they tell you that. Even short seller reports tell you this. So even if people that hate MSCI tell you it's 30%, the bear case, the bull case, everybody's telling 30%, it's 30%, right? Uh, Can you see if they have pricing power? If you understand the business model, if it's inside your circle of competence, you will know if it is a hedge with the inflation. You will know if they have increased their prices over time. For example, I'm looking at Mutai right now in China. They sell liquors in China. They have reported their average price for the liquors for years. So you know, year after year, what is the average price of a bottle of alcohol. I don't know if I can speak about these kind of things on a live on YouTube. Anyway, so be it. So yeah, we'll see. We'll see how it goes. But yeah, this is how you can assess pricing power: the qualitative metrics, interviews, looking at the company's track record, see what they have to say, look at competition. If everybody in the industry is raising their prices, maybe your company is raising their prices, and maybe they are lying. Maybe they are lying. Maybe they say they have a pricing power, and actually they don't have a pricing power. So yes, you have many ways to look at pricing power beyond looking at margins, actually. And if you want some help to assess this, as always, you have the first link in my description, which is the link to join my coaching program. I can even give a better link. Uh, this is for you, Polo Mono. I'm giving you on the chat the link to book a free call with me. So in the description of this live on this video, I believe you have the page, my website, with the information, with the video, see the testimonials, see how this coaching program can help you. And on the chat here, I'm giving you the link to book a call with me. It's a 1 hour call, just you and I. Shoot your question. We'll have a chat. It will be fun, and we'll see if we can work together. If we are good fit working together. And I'm telling you, you will learn a lot about pricing power if we work together inside the coaching program. You will have a lot of value. You will have access to all the replays, the modules, the weekly calls. We analyze companies together. If you want to step up your investment game, this coaching program will help you. And if you are doubting, you can watch the testimonials. I released a testimonial video yesterday for Charles, and I have many testimonials. I have a testimonials channel. If you hesitate, you can watch the testimonials. And I'm telling you, the call is free. The call with me is free, guys. You literally don't have anything to lose. If we are a good fit to work together, we work together and you improve and you generate your 15% per year, whatever you want, 20% per year. And I show you how I generated 25% per year. And if we are not a good fit for some reason, you say, okay, good enough. And you have some free advice. We have a chat, and that's it. That's basically it. Guillaume, hello Chris, hello Guillaume, salut, hello Guillaume, how are you? Valuation so high for Poland, yeah, yeah. Well, it's kind of hard to have opportunities in Poland, right? You have nothing that is dirt cheap. This is a great country. The GDP per capita is through the roof. It's one of the most, I would say, a very good country to invest in when it comes to the economy, businesses. So Poland, very good. And yeah, hi Guillaume. I don't know if you have any Polish names in your portfolio, but could be nice. Could be nice in the future. But now I see nothing of value in Poland. Nothing cheap that is of interest for me. Okay, Evin that asks thanks. Talking about simple businesses, Cake Box PLC, making and distributing cakes in Great Britain. Seen before. What is that? Okay, now you piqued my interest. I'm on a diet right now, so if this is anything related to food, uh, well, you will hear about me. Cake Box. Come on, come on. If this is a donut company, I will not analyze it. It will be too painful. Uh, it's a retailer of fresh cream cakes. Oh, oh man. It offers a range of cakes that includes cupcakes, photo cakes. Yeah, I don't have to look at this. Oh, come on. Fruit cakes, very well. Plenty of cakes, wonderful wedding cakes. The company recognizes revenue from the sale of sponges, French cream. Yeah, they sell cakes and the components to make cakes, I believe. Market cap of $100 million. So small cap, micro cap in the UK. Gross margins are pretty high for a cake company. Net income are okay, 10% is fine. Pretty good. Why did they take so much debt recently in the latest quarter? like $20 million of debt. They generate how much free cash flow per year? $4 million, $5 million. Yeah. Okay. So they have some debt, but they are growing their revenue double digit, I would say. Pretty good. Well, UK citizens love cake. Net income is struggling to keep up with the demand. That means margins are going down. That means inflation on raw materials, inflation on milk, on the maybe investing in a restaurant business, cake business. You rely heavily on the cost, on the raw materials. Maybe this is the reason why the ROIC has been trending down. I don't know. But I mean, I'm also adding it to my watch list. Thank you. Okay. So I suppose they made an acquisition here. You have a dilution, more assets, and more debt. They made an acquisition, I'm almost sure. P/E ratio of 18, 15. Wow, that's a little bit expensive for this kind of business. Okay. Okay, fair enough. Thank you for sharing. I don't know this company. I will do some research. I'll do some research. I like the growth of revenue. They are taking more market share, but I know nothing about this industry about cake. I believe it will be out of my circle of competence. When did they IPO? Is it an old company? No, they IPO'd in 2018, and it's flat since the IPO. Okay, fair enough. Um, Kartik Bhatia. Hello, Kartik. Kartik booked a call with me. Wonderful. Also, I'm digging into. Wow, you have plenty of names. Whoa, whoa, you shared 10 names at the time: MSCI, SPGI, IC, CME, and this one. My thinking is regardless of market cond. Please be careful what you write. These core exec and indexes tend to generate revenue. Please write full words. It's kind of hard to understand. Is that fair assumption, please? Can you write the same message with full words and with a couple of names? You are mentioning all the stock indexes, anything that is related to stock exchanges. I I know all of them except this one, TMX Group. Mm, okay, yeah, same kind, like CME. Okay, fair enough. This is a good industry to be in. The This industry of stock exchanges is very profitable and growing, and it's how you say it? It's an inflation hedge. If you are living in a world with inflation and a world that will become more financialized, it's pretty good. It's pretty good. Tom Van Wonsel, have you ever looked at HelloFresh? Oh, yes. Yes. And I don't like it at all. So yes, I did a lot of hours, many hours of research on HelloFresh. I've talked to equity analysts about HelloFresh, and the more I dig into this company, the less I like it. For my kind of investing, again, I'm not telling it's a bad company. I have never purchased some items for them, but I don't want to add it to my portfolio. Hi, Christoph. Thanks for your frequent and in-depth videos from a German neighbor. Hello, hello. What do you personally think of Copart and Mercado Libre? Mercado Libre is still too expensive for me as of right now, with margin of safety. Yeah, I share your thoughts. They are both too expensive for me, but very good businesses to hold in the long term. It's a matter of valuation. Wow, it's almost 2 hours of live. Well, I think we are almost done for today. Um, Investomat that asks, I have another international stock for your watch list. Thank you. I'm from Switzerland. I know Bilemo AG, which specializes on valves for heating or water fluid systems. They have a expensive hidden champion. Belimo. What is that? Yeah, if you are shy and hesitant, please take the opportunity to ask your question now because I think I will have to go in a few minutes. It's been 2 hours. What is Belimo? Belimo holding market cap of $13 billion. Field devices for the energy efficient control of heating, ventilation. Yeah, I think I understand this industry. Okay. Devices for the HVAC industry. Margins are high, pretty good. I think the HVAC industry will thrive in the next decade for many reasons. Revenue is growing double digits, pretty good. Net income is not following, or kind of the same. No debt, a lot of cash. All the cash flows are used to do dividends. What does it mean? Um, who asked this question? Uh, who was it? Investomat. Yeah, Investomat. What led you to this company? Normally, when a company uses all their free cash flow to do dividends, it means they don't see, sorry, they don't see reinvestment opportunities. I tend to shy away from this kind of businesses. Like literally, all the cash flows are paid to dividends to shareholders as dividends, and the dividend yield is 1%. So the company should be expensive. If you look at the P ratio of 60, yeah, fair enough. Yeah, I mean the industry is well positioned. The HVAC industry, I'm very bullish on the HVAC industry, and the stock has been on a run. Maybe because of valuation, maybe not. Why do they have such a strong dividend policy? If the stock is expensive, I would understand why they don't do any buybacks, which is quite smart. But do they reinvest their cash? They have a little bit of capex every year. Could be interesting. I have a few questions for you. Please, if you know how to answer this question, the chat is here for you. Investomat. So please, what do you see? Investomat, I'm asking you directly. What do you see in Belimo? What is making you think it is great to be invested in this company in the long term? Valuation has shot up recently. From 1 year ago, it was from a P ratio of 35 to 65. Wow, this is the reason it has outperformed, I guess. Yeah, normally now you can see the chart of the P ratio. Yeah. Uh, P ratio of 35 at the time last year, and now 65. Valuation is sky high. Uh, Tom Van Wonsel, can you maybe go into it a little bit further to why you don't like HelloFresh? I don't like the business model. I don't like the business model. I don't think it's a good company for my portfolio. I have seen many disappointments from the company. I've been following the company for a while. I have seen too many promises made by the management teams that were not met. And this is a thesis breaker. Only this is maybe the number one reason why I don't invest in HelloFresh. Okay? So they had a spectacular boom during 2020. And since then, the company is back to being unprofitable. And the debt level is going higher and higher and higher and higher every year. How many yellow flags, red flags do you want? Yeah, I'm not a fan. People can understand the business model and they may like HelloFresh. It is cheap, it has some potential. Maybe they will survive with this high inflation world, and maybe not. And this is why we play this game. This is why we invest. We have a market for everybody, and that's life. That's life. Okay. I see that somebody booked a call on my link. Wonderful. I will not share the name publicly, just for the sake of the privacy. But if you want to work with me directly, I'm sharing you the link on this chat. I'm very happy to speak with you directly. Only motivated people, please. If you're not motivated, please don't book a call. But if you really want to step up your investment game, take a call. It's free. If you think you have the potential to grow your investment and you expect to beat the market, take the call. I mean, you literally have nothing to lose. It's kind of crazy, but this is how I like to work. The risk reward is immense. I would say, like, I'm taking the risk all on myself. If it's not a good fit, we just have a chat. So it's a win-win for everybody, and this is how I like to work. Especially on the coaching program, it's a win-win-win for everybody. Like, you have such guarantees that you will like it. You will see. We'll talk about it on the call. So to this person who has booked a call with me, thanks to the link I just put on the chat, I will see you. When is the call? Okay, fair enough. Wonderful. Let me just check one thing or two. Okay, perfect. Um, Benny that asks, what do you think about Namsys? I don't know Namsys. First time I see this company. Namsys. It's a micro cap in Canada. No, it's a pass, automatic pass. Software solutions for currency management. It's an automatic pass. I will not even look at the fundamentals. Have you looked at ODFL? Yes, a lot. Since 2020, actually. I have looked at ODFL and done a deep dive, actually, on the whole logistics industry, all the trucking industry. I have analyzed all the players, and I like ODFL. Unfortunately, the costs are rising and valuation was high at the time. It had a P ratio of 40 at the time. Now the valuation is has gone from 40 to 30, so the stock has gone down, and the earnings have decreased. So at the same time, you have margin compression, net income going down, valuation going down. But the business is very good, I would say. At the good valuation, I would gladly buy ODFL in my portfolio. Investomat that says, my background is that I worked for this company for a short time. You mean the company called Bilemo that we saw before, right? They have outsourced a lot of things, having the individual components manufactured externally and then assembling everything in-house. I personally know the majority of the company's shares are owned by the founders foundation. This is probably why the company focuses on dividend distributions. Yeah, this could be a yellow flag, only this. I think is good that they have outsourced a lot of things so they can focus more on R&D and assembly. But you are right, Swiss companies focus too much on dividend payments instead of buybacks. I don't like it either. Yeah, sorry for this big chunk of text. No, that's good. Thanks for all this disclosure. This is great. Yeah, the European companies are not famous for doing buybacks. The European companies are famous for doing dividends because most of the time it's a family owned business and the next generation of owners, they want their paycheck at the end of the year, at the end of the month. They love dividends. So that should be it. I mean, that's a good lesson for the last question. Oh, I see another one. Benny that asks, that could be the last question, guys. It's been 2 hours. What about Cal Main Foods? I hope for you it's a quality business. I don't know this company. I think I've, I've seen it somewhere, but never done the research on this one. The food company is quite interesting. The food industry is quite interesting. Like you have the inflation for cattle food. This is very interesting. Calmain Foods produces and sell shell eggs. So if you have an inflation with egg, like we've seen before, this company should make a lot of money. Its main market is the US. The company's product portfolio contains nutritionally enhanced cage-free organic and brown eggs. Okay, okay, okay. Very well. They sell eggs. And exactly as supposed. Now they are widely profitable because of inflation when it comes to eggs. I suppose it would be my best guess. That means before COVID, before inflation, the profitability was not great, and then suddenly you go from a net income of $300 million to $1 billion. You multiply by four your net income because of inflation. What do you think the price of egg will be in the future? If you think it will stabilize or be higher, good bet. So zero debt, a lot of cash. They have how much of debt? Of cash? $1.4 billion of cash for a market cap of 5.5 billion. Very safe. I believe it all depends on the price of of eggs, inflation, PE ratio of 5 or 7, understandably so. The price of eggs went up massively recently, which means they can go down massively. And if they go down massively, it will shock you. So let me price of egg price 10 years. All right. Now, how does the company work? You have long-term contracts, you have a fixed price. Before, what was it in 2020, 2021? Before at the time, let's say 2019, the price of egg was 70 cents, and it went up to 8, so almost more than a 10x actually. And now it went back from 8 to 2. What if it goes down to 1? Will the net income get cut in half? Especially right now, the price of egg and profitability. These are all good questions to ask because for some of these companies that rely on a commodity price, you have a lag. For coal companies, this is the case, for example. Met coal companies, they have a lag between the price of the commodity and the earnings. So it depends. These are good opportunities. We will see. Okay, well, it's 2 hours sharp. Thank you, everybody, for attending. If you want to go deeper on every one of these stocks, YouTube is a free tool that you can use. This is wonderful. Please do your own research or use ChatGPT. Or these are great tools. And as always, if you want to work with me directly and we go do deep dives on companies, you have links for my website, links to book a free call with me. So that's it for today, guys. I wish you a nice rest of your day. Thank you for coming and wish you a good week. Bye bye.